Monday, just after 3 p.m. Eastern Time on August 4th. The week of August 4th through the 8th, kicking off on Monday. Markets fighting back a little bit. Last week, Thursday, Friday, with the close, we were down about 3.5% on the S&P 500, a little bit deeper than that in the Nasdaq. The Russell pulled back about 6%. So thumbnail for today is the Russell 2000, the best index for the second half of 2025. Just question I'm posing. I took a trade today on the my waterfall income service. We have a couple of live positions running on the Russell, looking for some time out to December and January, potentially a nice little trade. If you're looking to get to all-time highs, Russell has almost double digits to get back to those all-time highs versus S&P is at all-time highs versus the Nasdaq is at all-time highs, or just off them rather. But we hit all-time highs on the S&P, the Nasdaq. The Dow was just shy of them, but the Russell had about 9 to 10% to get there. So we did see a pretty big change in the Fed watch tool. So if you look at the CME futures and the Fed watch tool, now there's a pretty sharp probability that September and October and December, the markets are anticipating 3 cuts by the Fed. I would imagine they're going to cut 25 basis points on each and try not to make the mistake they made last year in September when the Fed cut by 100 basis points and the bond yields went up by 100 basis points. So I think 25 basis points, 20.25% getting cut. Hopefully that reflects about the same trend in the yields. If we see yields lower and we see bonds potentially catch a bid there, maybe. But that's the big question. Like, what is the bond market going to do from September to December? I think if it's a slow, steady rate of change versus an aggressive, abrupt, chaotic rate of change, then the markets will take it in stride. If we see a big disruption to the bond market, bond yields, then we got to watch that carefully from September to December. But just a couple correlations to keep an eye out for. So let's talk about this. Russell, is it the best index for the second half of the year? With rate cuts coming, it's going to be interesting. I do want to keep an eye on this. I'm going to check this back and forth before the end of the market. We have 49 minutes left until the close. If I see price staying below 63.20 and 63.25, I have some profit. I may take this trade here. I don't love this trade. It's giving me 270 credit here, which would give me a break even of around 63.22.72. But if we revisit the highs at 24.25, I'm going to regret that decision. So I'm going to keep a close eye on these two trades right here and see if I want to increase either one, take the trade, maybe take in a lesser credit if we're not going to make a big poke to highs again. But I'm hoping that we just stay at 20 or less. So 63.20 or less would be helpful. 25 is fine, but I obviously want to see both of these trades pay out. So for me, the ideal position on SPX today for some daily income would be seeing the SPX close and settle below 63.20. So I have a chart alarm set down here at 63.10 in case it fades a little bit. All day we just kind of ripped up directionally, some sideways chopping here, popped up again, sideways chopping here. The market's up, 1.32%. That was quite a bit above the VIX, which retreated to 17.68. I was kind of basing my highs off of the VIX around 18 and change today. Also, if I show you the ATR levels, this is a 5-period average true range on the SPX. We exceeded the 100% ATR again. This is 3 days in a row that we've gone up over 100% of the 5-period ATR. So that's just, catching the market a little bit off guard, a little bit of higher volatility, and the market is exceeding kind of this the VIX rule of 16 that I like to play a lot of my days. But we've obviously hit some resistance. You can see the ceilings kind of right here around 63.20, 63.25. I'm going to keep a close eye on this by the close. But how far up do we go today? Well, we opened, here's our close from Friday. We opened up right around the 50% level. This is 50% ATR. And then we went to the 100. And then from there, it stalled. Now it proceeded to go higher. I would venture to say this is probably around like 120, 125% ATR today, which is fine. I mean, obviously, I can't stop the market from going up and stop the market from going down. But we saw some like 125 and 150% ATR last week with that volatility on Wednesday, Thursday, Friday. So, just a slightly higher volatility environment, which is understandable. Could I potentially, trying to think if I can get a pin trade in here. I think I might have messed up a little. Well, I'm not messed up, but let me see what I can maybe hedge here. Could I do a 25 and a 15, keep it around this window and go, let me flip this around. So if I did a 25 by 40 and that's not right. Let's see if I flip this option chain. So if I sell the 25, buy the 40, is that where I want to be? Maybe the 20, and then sell the 30 by 15. So go 20 wide, 20 wide. That's not a great trade. For this late in the game at 45 minutes left, that's a lot of risk in case we end up falling a little bit. I'd like to see it just to go down below 63.20. So I'm going to hold off on adding. I'm going to see if I can maybe watch these two trades here for a bit more premium. I'll just keep an eye on this one on my other screen. So watching this one to see, do we hit the highs around 63.24, 25 today? If so, I might take a modified trade on a bear call spread here. It's offering $3 for a 63.20 by 63.30. That's not a bad trade, but the break even is around 63.23. If it offers up, $4 to $5 credit, then my break even is around like the 64.25 ish. So that's kind of what I'm going to look at, is try not to finish too much higher than the intraday high at 63.24. But if I take the trade and I lose, then I'm risking up to $500. So I got to be careful on what I'm willing to kind of tolerate for the rest of the day. Hopefully prices continues to fall a little bit. So, all right, we'll see. Line in the sand at 63.20. So if we settle there, cool. If we go down in the next 45 minutes, so we settle, 63.16 or back to this little 63.15 level, that'd be very helpful on the intraday movement. All right, I'm going to move, switch gears here. Let's go to the Russell. So the IWM, Russell 2000. We had a pullback of the recent highs in late July. This would have been July 23rd. The Russell pulled back about 6.5%. Okay, that is a bigger pullback than what we saw in the SPY and the S&P. That's a bigger pullback than what we saw in the Nasdaq. Okay, comparatively, the Nasdaq had a pullback from high to low last week, down about 3.9%, almost 4%. Russell pulled back a little bit more. So, 3 1/3 to 4% pullback between S&P and Nasdaq. The Russell pulled back about 6.5%. So what I'm looking at is this a time to position for a little bite on the Russell? And, if we go high to low, lower high, lower low, or just equal, if we go equal highs, equal lows, maybe this is just a bit of a accumulation phase, and then the market can head back up to try to get back to highs again. So I think that this is maybe one of my, preferred instruments as far as watching everything today on, oh my God, is it highs again at 63.25? You piece of crap. All right, let me keep a close eye on this one. So this is now offering me $5 and change credit. Oh, don't rip up any higher than that, you turd. So 20. I'm going to replace this trade, see if I can get 550 credit maybe. Try to get $5 for this trade if I can. Come on, don't be. All right, I just got filled for $5. All right, so I got another trade in here, a 63.20 by 63.30 for $5 credit. That puts me at a break even at 63.25, which we're trading at right now, 63.24.72. So if we fade off of this, for every little bit that we fade, this is 20 by 30. Watching that here. So I'm going to keep a close eye on this one, see if I can pull a break even or better. And I'll let the other one potentially fill. If it goes up to $7, that's a 63.27 fill. So I'm taking this bad boy right into the close today. Come on, prices, don't be a-holes. 40 minutes. Respect the levels. Respect this high. Maybe poke the highs and fade. See if we can get some settling. All right, I'm going to set this chart alarm back around 63.20. See if we can get back below that. All right, I'll keep talking Russell. So what I'm looking at on Russell is if we go sideways, high, low, equal low, something like this, a little consolidation. Anytime that we get back to, if I don't think we're done necessarily. I think the market can still offer a pullback here. High, low, lower high, lower low. I think this area would be a fantastic spot to get long the Russell. So if you're in my waterfall income, the 210 to 200 zone, we'll probably start crafting some trades in there. I'm looking for trades to either get back to this recent high in July or get back to these highs again by the end of the year. The nice part is I only need price to move above my line in the sand. If that line in the sand is literally 208 or it's 205 or it's 201, as long as price is greater than those levels, I get paid on those trades. So if we're up here, we get paid. If we're heading towards highs, we get paid. The nice thing I like about the Russell is if we get back to, this is kind of a catch-up trade. If the Russell can go back to all-time highs, this would be able to kind of match the run that we've seen on the S&P, right? S&P from the lows all the way to all-time highs. We exceeded those all-time highs by a decent chunk. We ran past them by about 4 1/3%. You go to the Qs, we ran by those by I think 6 or 7%. So all-time highs here. We go up to around 6 1/3% past the all-time highs. And again, that doesn't mean like that's the high for the year. The Dow just shy of all-time highs, but same type of thing. Do we get to all-time highs on the Dow? The Russell is still off of those all-time highs. Okay, so from current price, this is current price of the Russell. We go up to all-time highs, which are back in November of 2024. That's almost a 12% move higher. So if you're looking for an index that has the chance to catch up, this one looks pretty good. Okay. Is it a guarantee? No. Are small caps usually performing as well as large cap? No. But the reason why this is kind of my theory right now is looking at the Fed Watch tool. These probabilities have shifted pretty aggressively since last week. We had FOMC on Wednesday. We had all earnings and Big Mag 7s last week. We had like 37% of market cap up with earnings last week with Meta, Microsoft, Apple, Amazon. We had MicroStrategy, Coinbase, all over the place. The rate cut has now jumped up to a 91.9% probability. It was 87 this morning. Now it's 91%. So the market is pretty much baking in that rate cut in September. And now there's a high probability that they cut again in October and another cut in December. So the market's now looking for potentially a 3 rate cuts by the end of the year. My big question is when they cut rates, what does this do to our 10-year yield? Okay. So are we getting the markets are going to rally, our bonds rallying on this yield? So 10-year is down, right? We had a big follow through. This is last week on Friday. So the bond yields are down. We're getting back towards, we're testing maybe Liberation Day lows before the market, kind of broke. We had the big basis trade explosion. All right, watching 25. Come on, dude. What is this stupid market doing? I'll come back to that in a second. So anyway, yields are down. Let's take a look at TLT. Up to 87.99. I'm looking at diagonal spread on TLT that I could get called away. So keep a close eye on that. Richard, what's the question on what setup? You think the rate cut will be a good thing for the market? I mean, I think that the rate cut is already highly anticipated and part of it is priced in. There's really 2 angles here. One is the rate cut is kind of going to trigger maybe a bearish move in the market because the markets have done everything it possibly can to like price in all the good. It priced in the pivot on the trade war. It priced in the Fed being dovish. And it's like now it's buy the rumor, sell the news. That's if we cut September, October, December, and the markets don't love it. I think the only way the markets don't continue to go higher is if something breaks. I really do. I mean, we have to have like a complete breakdown of like the U.S. housing market or a complete breakdown in the labor market. Obviously, there's a lot of noise between the Fed and Trump, but tariffs, they matter. They're inflationary, but this administration is a pro-growth. Get out of this, get out of the problem by growing. Okay, so it's no longer tame the problem by cutting spending. It's no longer put a chokehold on growth. It's rather run the economy hot. Grow your way through this until something breaks. And when something breaks, then the Fed's going to come to the rescue in a big way. I don't know if that's going to be good or bad because it's going to take so many more dollars to have the same type of effect that we've seen since COVID and since 2019's backstop and since 2014's backstop and since 2008's backstop. I mean, that's the crazy part is now we're talking a backstop of, I don't know, $10 trillion, $15 trillion. Which is it's just so much bigger than, I mean, the US threw like 3 trillion at COVID and the global economy threw like 6+ trillion, right? 2008 was like less than $1 trillion. It was 600 or $700 billion on a bailout package. So, I mean, we're talking exponentially more to throw at the problem. But I think that's a ways away. So I think right now the landscape is that there's risk on both sides of the trade, right? There's tail risk either way, and it looks something like this. If you have the normal market here and your average distribution of returns, you're looking at something like this. Okay. I would say the market right now, I'm putting a bit more of my bias on the market going higher by the end of the year. Okay. To what degree are we just like pure melt up and crazy gains to the upside? Maybe, but I'm not sure. Okay. There's downside risk with noise. I think there's a lot of noise, potentially a 5 to 10% correction here and there. It could be ugly. It could be a reason. I don't know. Maybe we're talking about it right now. Maybe we're not. But I think that the scary part is this becomes the right tail risk, that this would be the melt up, right? This is the melt up and blow off top. And I don't think this is priced in. I don't think that the blow off top is priced in. I think that the melt up that we've been experiencing is obviously gotten us through this like April, May, June, July move, but the blow off top hasn't happened yet. When I say blow off top, I mean like the market just runs hot and capitulates and probably testing like high 6,000s, maybe 7,000 plus, and does so with like minimum pullbacks. So a blow off top to me means a little bit uglier stuff afterwards, like a blow off top that keeps melting up, and then a bigger, nastier correction that we'll probably end up having. A healthier market cycle would be market goes up by 5 or 10%, pulls back 2, 3, 4, 5%, goes up again, pulls back. It's like we don't have those cycles. It said we go down 20%, we go up 30 plus percent, we go up another 10, 15, 20%, then we drop 20, 30%. I mean, the swings that we're seeing in these highs and lows, these booms and busts, they've been more and more popular and faster. These cycles are way faster for the last decade than they've ever been before. So I think that this right tail risk at the melting up and the blow off top hasn't been seen yet, and this is where I think the rate cuts could come in and potentially ignite this move to the upside. It's not necessarily a scary thing. I think it's great for asset holders. I think it's great if you're long the markets. I think it's good for stocks. I think it's good for gold. I think it's good for Bitcoin. I think it's good for a lot of things risk asset wise. But the left tail risk would be something breaks, and right now it's like, what is going to break? What's going to break? We can stack up all these reasons on why something should happen. Well, the labor market is bad according to the job prints last week. And is it though? If somebody in the US wants to get a job, you think you can get a job? Doesn't mean it's the best job, but could you go get a job? Probably, which means our labor is fairly tight, right? Wages have not been keeping pace with the growth in inflation. I get it. But if you want a job in the US, you can probably find one. And it's, a job to a better job to, your career of choice, if you can work your way into it. But something breaks. So we have to have a labor market breakdown, which hasn't happened yet. We have to have a debt breakdown, which we haven't had happen yet. The government's going to keep spending. We still have the Federal Reserve. The whole world's not moving away from U.S. assets. The whole world is still financed and backed by the U.S. And that's not going away. It's certainly not happening overnight. The housing market, the consumer in the U.S. has to break. It hasn't happened yet. So if something breaks, then sure, I understand there's left tail risk where things can get a little bit nastier, wilder to the downside. But on the opposite side, just don't ignore that this right here, like this is all normal. So in the middle, this is normal expected ranges. Type in a word, yes, that makes sense. So, plus or minus in the upside, plus or minus in the downside, right? Normal ranges. This is all kind of priced in. This is the efficient market. This is all priced in. Make sense? But it's the outlier moves at like the 1.5 to 2 standard deviations, the 3 standard deviations to the upside. I think it's going to be difficult to get to, but it could certainly happen. And on the downside, if something does break, the ability to drop, double digits in a short amount of time, like we saw during April, like we saw last summer from July to August, the ability for this market to have like a 5 to 10% very snappy correction can happen. But if the dollar remains pretty resilient, if the bond market remains pretty resilient and just stable, I'm not saying it has to go anywhere, I'm just saying stable, then we probably just stay within those normal expected ranges. But I am certainly, trying to play hedges to the downside if something breaks. I'm trying to stay out of the way if the market melts up. And I'm just taking little income stabs and positioning for the melt up to continue. I think the melt up is, to me, the higher probability trade right now versus planning on the bears. I think the bears are going to have to wait longer. I think if there's any major shift that the bears really take true control, it's going to have to be a monster policy change. And the only thing I see changing from the Trump administration is going to be policy change, i.e. the midterm elections in 2026. I don't think Trump is going to go back to cutting spending, firing everybody in the federal government, and trying to break something economically. I think Trump is going to continue to push growth, push deregulation, try to push all these things now in this aggressive agenda to get as much out there that's pro-growth, pro-deregulation, win the arms race, win the capital race, whatever it is. Win, 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 win. That's what the U.S. is trying to do right now. If it's trying to catch up, if it's trying to win the energy race, if it's trying to win the AI race, if it's trying to win whatever it is, that's what Trump is pushing for. Okay. That to me means that there's probably more risk on the upside. Okay. So, own stocks, own gold, silver, own Bitcoin. Okay. Own. Now, trading, investing, enjoying the melt up. Okay. Could be pretty wild and crazy. Something breaks, like I said, this would be U.S. labor, U.S. housing, or, government versus Fed. And until that, or I guess the U.S. consumer, which would be just U.S. spending. So if something over here breaks, then sure, there's risks. But what ultimately do we have to watch? Just watch price. Just watch price. Just watch price. So if we're not crashing and we're slowly melting up, may the melt up continue. I still think the market has room to fall. I hope that it does. Just for a little bit of a pullback. Okay. I've spent weeks now talking through these pullback levels. I'm hoping if you're out there following me from, youtube.com/Chris Pulver, youtube.com/Financial Wars, if you're following any of my services, we talked to these at length. I think that a meaningful technical correction is setting up. Okay. Now, if this is the start of things to kind of rattle the market, that's fine. Now, how many infinite nuanced ways can the market play out from here to have some type of correction? Right? It's going to go up, down, sideways in some infinite combination. So are we going this high, this low, and the market from today just kind of spends the day obviously fighting back, and the market's green right now, right? But we're pulling right back to this gap. Well, what happens by the end of the week? So I'll poll everyone in the room today. Okay, I'll pull my Telegram channel as well with like 2,000 followers. I'll pull Discord today as well with 1,000 plus followers. I'm curious, okay, do you think that we make a new high first, or we take out the lows from last Friday? No right or wrong answer, just your opinion. What do you think? Are we going to hit highs? You can type it in the chat here. Type in highs if you think we're going to hit highs first, okay? Or type in lows if you think we're going to take out the lows. There's no wrong answer. Just give me some feedback. Okay, and so the low would be from August 1st. The highs would be from the 31st. So I'm going to build this poll right now in my Telegram. See if I can do poll. Okay, what your vote matters. What will happen first? S&P reaches new all-time highs. S&P hits fresh lows. That would be August 1st. And this would be July 31. Okay. That's it. Okay. So poll is in. I'll throw this in Telegram. So if you're going to join my Telegram, give me your feedbacks here. William says new high. Sean says new high. Shen says new high. Lee says new high. Wow. Adrian says, I like to get the lows first, but seems like highs are where it's going. Highs, lows. Okay. All right. That's interesting. So let's get some votes. We're back to 63.20. This is good. I'm going to take a quick peek at my daily profit play now that we're 26 minutes left. This one's up $50. This one is down 28. I might look at a net close today if I can. This one's up $100. We're falling. See if I can get a trade out of this one. So I'm at 299. Come on, baby. Let's go a little bit lower if we can. So I'm down $26. I'm up $66. I'm going to try to get this one up a little bit further. See if I can net out some profit today. So right now the break even in this one's going to be 63.23. And it's up over $100. Come on, baby. So closing. So I'm in for 299. See if I can get out of here for like $2 or less. All right. So still watching. Key level for me is 63.19. A close below that today would be clutch. All right. So I'll check this here, but are we hitting all-time highs from July 31st? Are we taking out fresh lows from August 1st? Very curious. So we'll come back and revisit that tomorrow. All right. 299. I've got to watch these levels. So there's some profit there for 80, almost $90, down 25. That's a net 70, $75 on the day. I'd like to get this one over $100 if I can. Come on. So 245. See if I can cancel this. 122. There we go. Come on. A little bit lower would be great. See if I can get this thing down to 235. Gives me $130 on the day. Got filled at 235, and that means this one I'm going to close out for a small break even. 80 cents. Let's go 75. Perfect. All right. I'm out. That's a good way to manage today. Net, I'm going to put this for daily profit play. All right. Net results, DPP. Had to get creative, but here's the math. Trade one. Bear call 62.30 by 63 or 63.30. 20 by 63.30 for 92 credit. Bear call 63.20 by 63.30 for $5 credit. This combo closed for 2.35 debit. Trade two, bear call, which is the 63.25 by 63.35 for 70. What is that? 78 credit. Closed for 75 cents debit for a small win, basically break even. Net profit on the day, that gives me $592. So 299 minus 235 times, so 128 plus another 3, so 131. $131 on the day. Okay, so I'm going to delete, settled in for the day, net profitable. Another tester right at the top today. If we get a trade to close below, 63.20, then that means we have two winners on the morning, from the morning. So I'm going to keep a close eye on this one. All right. So we have 22 minutes left. And if price is less than 63.20, then yes, of course, I could have made more money. It's okay. I'll take the $130 in the day. If you're still in my daily profit play, you should have some break even or better going. This 63.25 should be in full profit or close to it. This 63 or 25 rather should be close to full profit. The 63.20 is going to be close. That's where the risk is at. But that's also why when this came up here, I did another 63.20 by 63.30, got filled for $5. That trade helped out with my break even. That's what it enabled me to catch a few catch a few bucks. Now, if I go back to SPX for this trade, right now it's trading around 270. So I got it at 235, it's trading for 275. I mean, this goes lower, lower, lower. That's fine. But if it gets back above, I've got some risk in this trade at the 63.23 mark. So if it gets below 63.20, this is good. But anyway, I'm done. Like I got out, break even, and ended up grabbing about 65 cents in this one for a 2 contract winner. So I'll take the win. Certainly fighting the tops here a little bit, but the goal of the daily profit play is try to finish the day positive, and we did it. So that was the goal, and mission accomplished. Tomorrow's another day. Okay. All right. I'm glad I got that squared away. We still have 20 minutes left. We'll see where the market ends up closing, and see if I, one, should have made more money, or shoulda, coulda, woulda, or if I saved myself some risk and I went ahead and just took the win on the day. So for a net win of $131 on just the daily profit play, that's fine. That is the goal, is trying to grab some income. But I'm obviously curious where the market settles today. We did hit a 100% plus ATR. We hit about 120% ATR today. And I think after the volatility kind of ripped last week, we might be seeing more of that. This market is kind of shaking itself out. Traders that are with me in my daily profit room in the mornings, I'll have a link to that in a second. It did, yes. Found Treasure's asking about if it got filled. It did. I actually adjusted it because I was sitting at a $7 credit, and I did adjust it to $5. At one point, I watched it trading for about $5.50. So I can tell you exactly where that got filled. When this thing popped up here, when this popped up right here to the high, that was 63.25.91. That would have been very close to filling us at almost $6 credit right there. So I got, and again, it was super sensitive. So I saw it trading for about $5.50. I got filled for $5. And because this market dropped, I was able to see that $5 credit now deteriorate down to a couple $100. Okay. All right. Okay, a couple more things. I do want to share, by the end of today's session, I do have a couple links to share. I'll post this right here. So daily profit room. Okay, I run the session Monday through Friday, 9 a.m. to 11 a.m. Eastern time. Okay, it's free to join. Okay, if you want my trades, if you want my live trades, those are for paid services. So I am constantly posting in trackers and Telegram, and I'm posting trades for members that are in that live session with me. If you want those trades, you have to be in the member service to get those alerts in Telegram and in your classrooms, okay? But the session itself is free to join. We talk top down, we talk macro, we talk trends, we talk watch lists. I can show my scanners. It's a spot for me to share pretty much my daily process, my daily routine, and try to make a couple bucks and position my portfolio, okay? Now, I have a couple links. You can join my Telegram. Join my Telegram. It's free. You can join my Discord. It's free. You can also join my SMS alerts. I'll put notifications rather than alerts because it's not trade stuff. It's SMS notifications for free. So before we're done for today's session, I will post all 3 of these: Telegram, Discord, and my SMS. And you can opt in, and there's ways to join through SMS. You can join my Telegram, join my Discord, whatever you want. Okay? But these sessions run every single morning, 9 a.m. Eastern time. Today was Macro Monday, a little top down. We had a correction last week. The volatility spiked up. VIX retreated quite a bit today. Okay? Technical Tuesday is tomorrow. Taking a deep dive into the markets. I'm still going to be looking to kind of fade these markets. That's why I asked the question: we go into highs, we go into lows. What do you think? I mean, this would be a perfect example. Let's take this down to a smaller time frame. Okay, look where we are in the 1 hour time frame. Not that this is like the best time frame here, but what did the market do on the 1 hour? We fell from this high to this low. We pulled back about halfway. All right. I think that if you just chunk this together, say that this market is making one big high. So it's a big high to low right here. Just put these together. So take the Thursday fade and the Friday gap and sell off on Friday. This is one big move. So now we have a high and a low that we are going to be watching here this week as traders, right? So this is the high that we should be watching. This is the low that we should be watching. What does price do from here? Price is either going to go up to those highs, down to those lows, or stay in between. It's that simple, right? So I am going to approach every day this week in daily profit play in my alert service that's trading for daily income. I'm going to look to see, can I fade these moves even if we have a grind like we do today? We only had about 30 minutes of direction early in the morning. And then late in the day, it's just been a chop fest, barely higher, barely higher, barely higher. Yes, it went up today. The market's up 1.33%. Cool, but we gapped higher and then we rallied up a little bit further. But it's like a slow grind to the upside versus like the aggressive fall downside. So I'm still going to try to fade the moves. All right. I get it that the market may be able to come back and retest highs. Okay. Or the market does what I'd like to see, which would be a pullback towards the daily 200 moving average, which let me note that level. Let me go back to this chart here. I'll go back to the daily here. Okay. So it's around 6154, 6154. Okay. Let's go back to the 1 hour chart. Okay. 6154. Let's put a note there. Horizontal ray, 6154. It's right at this chart alarm. Okay. So if we get back down to the 200 moving average, to me, it would make sense if the market does something like this. High, low, lower high, lower low, right? We hit the 50 period. That's about a 4 to 5% correction from the recent highs. Is that enough to get the market excited to buy again? Maybe. Okay, maybe. Or perhaps, and this is what I said, the market can do, it's going to be up, down, sideways, but it's going to be the nuances of how it gets there, right? So I still like how we're drawing this out. It's either the big swing from Thursday, Friday last week, which makes this high to low. Either the market spends this week melting up, 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 and where does it go? Maybe back to the highs, but maybe it's not enough to get there. Maybe it's not enough to hit them. Maybe it's not enough to break them. And then it fades for another week in August, right? And we just have like a 3 to 4% range that the market's going to stay inside here for August. Maybe this market isn't just dropping 10%, right? But if it's pausing here, give traders, investors, funds a chance to do something. Sell a bunch of covered calls, collect a bunch of premium, see the markets go chopping sideways, a bunch of directional neutral strategies, make some money in here. All sorts of ways to play this, right? Okay. So we go high, low, we're right back to equilibrium. So this high-low swing, we're back to the middle. It is, your guess is as good as mine. I know nothing more than you do. Could this market go up? Could this market go down? The answer is yes, right? It could go either way. But if it goes down, I would imagine it's going to go down faster than if it goes up. If it goes up, it's going to go up probably slower, I would think. Okay? If it goes down, it can go down further, which is why I'm not going to try to be a bottom catcher. All I'm going to try to do on the bottoms is position for 30, 60, 90, 120 days out. Take some stabs, take some bites, get some nibbles, but take dollar or like kind of dollar cost averaging with option positions, take income trades and see if we can get a big enough discount to position for the market to then go back up to these recent highs. If I can do that, I'll be happy. If the market doesn't want to go anywhere other than sideways, okay, I'll just wait. If the market wants to go right back to highs again, I want to see how much conviction is there above the highs. Do we go higher, 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 and this is like off to the races again? Or is it back to the highs and then we fail or we fade? So is it going to be like a 3 to 4% range? Okay. Or is it going to be break the highs and just grind higher? Or is it going to be give the lows and possibly have like another sharper 3, 4, 5, 6% lower? I think 5 to 10% is very reasonable for the market to pull back. It could be now until September. It could be now until October and change. That's kind of the seasonality window for the market to pause or pull back. If we go higher, it's going to be higher at a lower pace, I think. So just be on the lookout, right? I think price action leads the way. If nothing's really breaking, When I said melt up in like the right side of the tail, like the right tail risk is people aren't really pricing that in. I mean, I don't know how euphoric this market gets. I would imagine in like a normal efficiency market, we're not going to see the market blast off, 3, 4, 5% a day to the upside. We're going to see the market do what it's been doing. Here's a good example of what this market does in melt up mode. Okay, go back to, and I'll come back and share these in a moment. Remind me at the end, make sure I share my Telegram, share my Discord, share my SMS links for you, okay? All right, here's what a melt up looks like. Okay, this market made a bunch of new highs. Once we clipped these all-time highs, which had been around 61.45, this is the previous all-time highs. Okay, I'm going to take note here and just kind of write some of these levels down. We broke the highs right here. Okay, we went up by about 0.5%. So we had a little spring of about 0.5% higher, and then we pull back. And then from that high, we break by 0.15%. And then we break that high by 0.3%. So a 0.15, a 0.3%. What else? We break that high by a little run here at 0.18%. And then we break that high. So 0.18%. Then we gap up. We gap up from this level. We gap up to around 0.89%. Was that a ceasefire? What the heck was that? What was this? Is that the ceasefire? Is that the U.S.-China trade? This is the U.S.-China trade agreement gap, I think. Is that right? Trade agreement gap was in here. So from 20. Yeah, so this is the U.S.-China trade agreement gap. This would have been the hell was this? Oh, this is just July 3rd. Okay, because the ceasefire is over here. All right, so this is just the big holiday push. And then we pulled back. This is our Middle East conflict, and this is the ceasefire agreement. Ceasefire agreement continued to propel it higher. All right, I'll keep going. So up to these highs. And then we obviously, July 3rd, we ripped up here. We pulled all the way back. We broke this high, barely. That high by 0.07. Okay, and then we broke that high later. That high gets broken by 0.19. I'm hoping that you're seeing the pattern here. We're barely carving out higher highs, 0.22%. Okay, and then another break here of about 0.3%. Then another break here by 0.18, by 0.3, by 0.5. Like these are all just incrementally higher levels. And then from this level here, new day up about 0.35, and then 0.35 by another 0.13, and then that one to the Wednesday high, which is another like 0.2 or 0.3. Okay, so my summary is this, okay? Our highs, so all-time highs from June to July were 0.1 to about 0.5% higher highs, okay? Now, if this happened every single day, if every single day the market was going to make an all-time high, which it's not going to happen. It's going to be some days, yes, sometimes sideways, some days pull back, and then it gets back to all-time highs. So if every single day we're making all-time highs, 0.1% with what's left, we have about 100 and some trading days left in the year, right? We're over the halfway mark. If we go out to expirations, let's go. This is a nice thing about an option chain. Go to December. So we have 149 days left. So of those days, take out all the weekends, you probably have 80 to 90 trading days left and maybe 100 trading days left. So if the market did like an average of 0.1% higher, 0.1% higher times 100 trading days, okay, this right tail risk I'm talking about, if every single day we made an all-time high by 0.1%, this market can go another 10%. Okay. Now, it can also go sideways and go down. It can take longer. We can have bigger jumps like 0.2, 0.3%, but we're also going to have like the sideways and downs. So I would be pretty shocked if the market from right now at these highs, okay, this is 5-minute charts, if the markets from these current levels can go another 10% higher. What's 10% higher? It's possible. 10% higher puts us up above or right around the 69 to 7,000 handle for the year. Okay, so we will see if this market has what it takes to get there and keep this melt up going. Okay, now we have noticed that there is a bit of reflexiveness to these markets. Like today is a good example. The market drops aggressively on Thursday and on Friday. And what does the market do today? It went well beyond a 100% ATR. I just have my 5-period ATR here, but look at where the market's kind of, and again, in normal conditions, this is where the market closed on Friday, a 50 to 100% ATR based on the last 5 trading days. Even with the higher volatility from Thursday and Friday, this market still has stretched above the 125 ATR today, right? So traders that are with me in the mornings, look, we calculate our tops and bottoms based on some pretty solid math. What did I say today? I said if we can get a sell trade around like 63.40, 63.50, like somewhere in that as far as like selling calls, we'd have a really high probability chance that we don't get a top, like we don't get filled in those we don't get stopped out of those trades, right? So the cancel trades I did, I had a 60. Let's see here, 63. Where was my 51? 63.25 by 63.50. Like that trade, I would have been trying to take it out if I had a break even around 63.40, 60. So, I mean, I'm curious if this one similar. I mean, it's only offering me $4 right now, which kind of sucks because we have 5 minutes left in the trade. My break even would be 29. I could take that trade and maybe grab a few. I'm not going to. It's 5 minutes left. But anyway, I'm just paying attention to the numbers. Okay. So where do we pull back to today? Look at this chart. This is pretty eerie. There's a close from Thursday. Okay. There's some good structure back here. Where's price coming back to today? The same level, right? Draw the low right here. We tested it. Draw the candle close right here. We're right at it. So tomorrow, in my opinion, this is a make or break of whether or not this market is really, you know what, fudge it. We got a dip, we're buying the dip. If that's what's illustrated by tomorrow, if the market goes up, this is where we're going, right? But if the market uses this as this is a low and this becomes a resistance high, the market fades from there. Tomorrow is going to be a key level, right? So either the market goes directional tomorrow or it's going to sit here and just hang out at this really critical juncture, and maybe it's an indecision day for tomorrow. And then Wednesday, Thursday, Friday, we get more direction, right? But we still haven't taken out the highs yet. We haven't taken out the lows yet. We're going to be trading inside that range. Does that make sense? So when you're paying attention to stuff day to day, watching these levels, you're just putting together a puzzle every single day, right? Or you can put together a puzzle for the month, or put together a puzzle for the quarter, put together a puzzle for half a year, for a full year. I'm pretty bullish on the market still through the rest of the year, right? I think that this market's going to have an incredible amount of resiliency that we will continue to trade and benefit from. So I'm not super bearish. What I'm looking for and wanting to see is just a little bit more of a pullback. That's it. Okay. So I'm just trying to get us ready for that potential pullback. I mean, my gosh, I'm super glad that I got the heck out of that trade, because I would be now down to fresh highs on the morning, 63.30. Turn this crap down a little bit. Okay. So fresh highs at 63.29 with 3 minutes left to go. And 0DT it's kind of an all or nothing. I was fortunate to get out on this little, nuanced pullback, but heck, I'm really glad that I managed to trade. So we still have 3 minutes. Let's see where the market closes. I can do the math. If anybody's holding all day for daily profit play in the alerts, we'll talk about the math on that tomorrow. But I mean, this is all I needed. I got out of the trade right here, and that 10 to 15 minute stretch was able to close out a net profit on the day, and glad that I did. And look, this goes either way, because one way is I grab the money right here, I make my $130, and then the market goes down, and I'm like, oh crap, I could have made this, right? I could have made $500 on that trade and another $92 on the other trade. I could have made close to $600 if price were to stay less than 63.20 today. But instead, price is like, yeah, we're going higher. But what level did I say today? In my morning session, I said, if we get to 63.40, I'm going to fade that move. And obviously in the final 2 minutes, I can't fade this move now. There's no time in the trade. And tomorrow, this level doesn't apply. This is all about today's levels. But where are we at? Look at this level right here. We are right at it, right? That close right there, we're at it. This close here, we're at it. That's what the market was capable of testing today. So today was an impressive fight. This is an impressive comeback trade. But is it enough to change the outlook? Not yet. Okay. I think this market is going to be between this high and low, and we see how this plays out inside. On the 1 hour time frame, we bounced off the 200 moving average, fought back today. Let's go to a slightly higher time frame. The daily time or the 4 hour time frame came back to the 50 period moving average, and we bounced back up. The daily chart only came back to the 21-day moving average, which for a while was like a pretty big stretch. We had like one of the longer stretches of like 60 some candles where it hasn't done that for like 40 years. Well, we tested the 21 period on Friday. Okay. So we can check that one off the history books of like, oh, wow, it stretched 60 some days, biggest stretch we've seen since like 1990. Okay, now what? Well, I still think that the point value of this high to this 50 period over 280 points, it still matters. Okay. Joy. Yeah, I can address that after close. That's fine. So are you looking at the tracker inside one click trading? So if I look at my waterfall, trade number, so the last one that I close out would be trade 92. Trade number 92 is closed. Everything else is closed. And then trade number 93, trade 93 to 100, they're all open. So I have 8 positions running right now. 93, 1, 2, 3, 4, 5, 6, 7, 8. I have 8 open positions. Let me double check that after session. Let me check that tomorrow. I did post a fresh trade. You get the trade alert from today. It was in one-click trading, went out to members real time, took the trade on IWM today. Okay, and the daily profit play, we'll talk math tomorrow morning. The 63.20 was threatened. The 63.25 was threatened. It needed a size in trade. I talked about that this morning. It needed a size in trade if we tested those levels. Okay, so where did we finish on the day? Well, we got up to the 63.20.25. We actually, unfortunately, we poked above that to the 63.30, which was just this level. But it did exceed what I had calculated out in the VIX. But I ran this based on 2 numbers. One is we had a VIX around 18, so we're looking for like a 1.15% move from right here. Well, we hit that around 63.10. Okay, so what I did is kind of that's my initial top of the day. That's like ceiling number 1. On top of that, I did the intraday prices of another 1.18%, which put me up here towards around the 63.40 to 63.50. That's why I said we have 2 levels. We've got like the 63.10.20 zone, and we got the 40 to 50 zone. Today was all bullish. It was all bullish. So, I mean, again, I feel fortunate that I was able to get out of the trade and manage it. And thankfully, it was a 0 DT, so I was able to manage it quickly. But the market today, I mean, for a Monday, this is a very non-typical Monday. Right? Not like Mondays don't do this. Usually Mondays look like this. Usually Mondays are this. That's what a Monday does. Not this. Okay, so the market was really crazy right out of the gates, and then it went sideways, up a little bit, then it went sideways. Like that's an easy Monday. We get those all the time. But it was this disruptive rip right at the open that kind of threw everything off. So right around 10, okay, right around this level, around like 10 o'clock, everything kind of settled down. From 10 o'clock to around 3, you had like really good range trading for the day. But it did mark its way back to the highs. We pretty much got right back into the close on that Thursday to Friday gap. So I go back to what I said. Based on where we are right now on the shorter time frames, we have this high, this low, we're right back in the middle. Now the rest of the week is going to determine whether or not this market is just going to go up, 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 or it's going to stall and go sideways, right? Whether you said new highs and new lows, it doesn't matter, right? We will wait and see. We will watch and see how this plays out day by day. I'm just getting us ready. If the market has high, low, pulls back today, and then the rest of the week is going to start giving some back, we'll have another pullback. Okay, how does that happen this week? We don't really have a ton of news. It's all earnings this week. I don't see what's really on the calendar for August 1st. So if we go to the calendar, okay, let's see here. Let's go to this week and let's go high impact. So anything pressing, we have PMI numbers, services PMI on Tuesday morning, so 10 a.m. New Zealand employment, bond auction Wednesday afternoon. Bank of England, they're looking to cut rates by 25 basis points on Thursday. And then Friday, we have CAD numbers. So It's a very light calendar week because we crammed it all in last week. FOMC, PCE, non-farm payroll, plus the tariff deadline, plus Mag 7. This week is all earnings. So the consensus of almost 1,300 companies, we're going to get a feel for what this market's capable of doing. Okay, so it's going to be kind of down to like earnings day by day. We gap in higher, lower. I'd say for the week, just write these levels down. Okay, write these levels down. High around 64.27. Okay, 64.27. And the low from last week, which is around 62.12. Okay, I'm just going to write down August 4th to the 8th. That's really what I'm watching. 64.27 highs, 62.12 lows. Are they tested? Are they breached? CPI, PPI next week. Yep, that's next week. So we'll have that second week of the month. We have inflation numbers from the U.S., which have been pointed higher. Inflation's probably going to go higher. Okay, inflation's not going to get better. It's going to be sticky. It's going to go up at a slow snail's pace, which is probably okay. The market can tolerate that. It's not fun. Consumers can feel it, but people are just stretching and surviving and just doing what they can. But as long as nothing breaks, there's just there's an incredible amount of elasticity to these markets right now. Okay. All right. So 64.27 highs, 62.12 lows. Watch these levels. All right. Before I go, a couple more things. Tomorrow's going to be Technical Tuesday in the Daily Profit Plan room. Come in and join me. I'll share the links. If you want to review any of my services, easy way to ask. If you're interested in trading the indexes with me every single day, if you're interested in trading the indexes with me every week, if you're interested in some news that I'm going to be trading this week, Newsbreakers is a great one. I'll talk about these more this week. I'll be looking for some high reward, low risk trades. Last week, we had a nice winner. Pinch point, we had some trades last week. I'm going to keep looking at my scanner. How to hedge your portfolio, ratio spreads. I'm looking at some silver futures, gold futures for today, and then some additional bonus education on options. All these are available. If you have any questions on these, you want to know more details, more information, support@prosperitypub.com. You can ask about any of these services that I offer. Okay, tomorrow, Technical Tuesday, and we're going to get into the daily grind per usual. We're also going to sprinkle in, I took some notes here today. I'm going to start sprinkling in all of these different lessons over the courses of my morning sessions. I'm just going to have like the anatomy of a trade, right? It's a little segment we're going to run every single day where we can break down a specific trade and apply it to live market conditions, maybe your favorite stock, maybe your favorite index, how to trade the market, how to understand, when we place a trade, what does it all mean? So debit spreads, credit spreads, all these fancy names. It's just understanding in an options market, in an options chain, whether we're buying calls or buying puts, or we're selling calls, we're selling puts, how do we create these trades? What do they mean? Where do we make money? Where do we lose money? What's our break-even points? Every time we deconstruct a trade, we need to know these things. This is like you're going to graduate from playing tic-tac-toe to checkers to chess by learning a little bit more each and every day with me. Okay? All right, so let me share some links before we go. This is Chris Pulver. Let's actually do this. I'll go Daily Profit Play. So Daily Profit Room. I'll share a link here. This is an SMS notifications. I've got a link to that. Just give me a second. Here we go. So if you're watching this on your phone or you want to copy and paste this, this is an easy one to get if you're watching this on your phone. If you want to join my Telegram, right here, Telegram is here, copy and paste, Chris Pulver, Telegram, free to join. If you want to join my Discord, I'll provide a 30-minute link. You can join in the next 30 minutes or else the link goes expired. Okay, Discord, I don't play around with like leaving stuff out there. I get too many bots, scammers, imposters. So I send a little invite link. So 30 minutes on my Discord. New link. Chris Pulver trading Discord. There you go. So you have SMS notifications, you have Telegram, you have Discord, whatever's most convenient for you. Tomorrow we'll jump into Technical Tuesday. I'll add some more thumbnails here. We'll probably start. I don't want to start like super advanced and super fancy. Let's just start with like one of the basic like debit spreads tomorrow. That'll be one of our takeaways. but applying it to, what's your favorite stock? You like to trade Nvidia right now? You like to trade Palantir? You're looking at something news-wise this week? Let's just talk about how to place these trades. What does it cost us? What's our risk? What's our reward? What's our break even? These should all, it's very simple addition, subtraction, okay, which I think we can all do that. But just knowing the numbers and where we make money and where we don't make money. The nice thing is anything I'm doing here for all these strategies are mostly defined risk. So I can only lose what I put into the trade initially, which does make me a much more gracious loser. And, which is why I'm not batting 100% on any service. But I've got 92.5% on waterfall for almost 100 trades. I've got over 92% in daily profit play for the last 300 trades. And, we just build the list from there. There's a lot of variety of strategies that I run in my services, but lessons will keep building. And there'll be plenty of good takeaways in this daily profit session. Okay. All right. Sounds good. So you've got Telegram, you've got SMS, you got Discord. Hopefully one of those works. And I'll come back and do it again tomorrow. Okay. Thanks for being with me today, everybody. I don't know. I consider myself lucky today. This was a lucky close. I mean, 0DT, I really got it right in here. Okay. I got it right in here at the end. Other than that, I would have lost. I would have lost today. Had I not managed that trade right there, I would have been down. I mean, I was 10 wide. I would have been risking about $910 here and about $930 here, and then about $500 here. So if I wasn't careful with managing the trade today, I would have been down around 20. This is crazy. $2,400. 2,300. I mean, big 2,300. So I made money on the day. I'll take that as a win. I was risking, at risk, max loss would have been about $2,300. Today was one of those days where I would have felt that pain. So this is why, I do what I do. I sit and I watch and I trade and I'm careful. I'm very precise, but it's because I'm also paying attention, So this is just what comes with it. I threw some trades in. I was able to scale in trade size in that helped me. We'll talk more about that tomorrow, but I'm fortunate that I came out ahead today. So, all right, tomorrow's a new day. I'll see you then. Take care. Daily profit play awaits. See you tomorrow morning, 9 a.m. for Technical Tuesday. Take care. Bye.